Hello and welcome to the Genuine Learning Blog. My name is Melissa Galasso, and today we're going to talk about a new GASB proposal related to accounting changes and error corrections. So this is something they've been looking at for a little bit of time here. This was issued May 20, 2021, and comments are due August 30th. So it's a pretty quick turnaround here. But really, this standard is really trying to make things more governmentally oriented. The concepts for error corrections and accounting changes comes from GASB 62, right? So GASB 62 is when we brought in all of the information from the FASB standards, and some of these date all the way back to the early 70s. This was some of the earliest standards that were issued, and they felt like there was a lot of inconsistencies and didn't really address some of the GASB specific items, especially things like the financial reporting entity, and they wanted to give an opportunity to take a fresh look. Now, some of it is going to feel pretty similar, but again, through a lens of a governmental accountant as opposed, or accounting, a reporting entity, as opposed to through the lens of what was at the time. Obviously, FASB's focus in the 70s was on corporations and those types of entities. So in order to get more understandable, reliable, relevant, consistent data, they wanted to really make some changes. So the first thing you'll see here are updates in the definition of accounting change. So you'll see here a change in accounting principle, a change in accounting estimate, and changes to or within the financial reporting entity. Again, that's a little bit of the homage there to governmental accounting. There used to be a separate category for prior period adjustments, but that was removed, very duplicative for a lot of that. So when we look at this, you can see here, they really tried to update this to be more reflective of government environment. So what is a change in accounting principle? It's a change from one GAAP to another GAAP, right? So from one generally accepted accounting principle to another that is justified. And again, they're going to focus on the qualitative characteristics here. So is it understandable? Is it relevant, right? What makes this preferable? It also includes implementing new authoritative guidance, right? So if there's a new GASB standard that comes out, that's a change in accounting principle because you're moving from the current GAAP to a new GAAP. And so again, when we look at this, these would be, this would be handling those that are from a GAAP to a GAAP. Now, if you went from something that was not GAAP to GAAP, that is not a change in accounting principle. That's actually an error correction because it was not GAAP and it's going to a GAAP. A change in accounting principle is going to be retroactively restated. So when we think about this, all prior periods, if applicable, will be updated, and we're going to run the cumulative effect of this new principle through those periods, right? So each individual prior period presented is going to be restated to reflect this new information. Now, again, this is always in absence of some requirement on how to implement, right? So if a GASB standard says it's prospective in nature, then we would just do it prospectively. So we obviously read the accounting standards for transition guidance, but this is sort of the general principle here. If we are not able to restate because it's just not practicable, then again, we should go to what we can and then state in the disclosures that we did not. Then let's look here at accounting estimates again. So this is a little bit of a change under the prior standard. We really think about outputs and inputs, but accounting estimates here are outputs determined based on inputs such as data, assumptions, and measurement methodology. So when we think about this, when we think about accounting estimates, these are things that are subject to change, right? So the data can change, the assumptions can change. And so a change in estimate results from the change to the inputs of that estimate. So again, when we look here, a little bit of a different perspective here, changes to inputs could be because we get new information or change in circumstance, or we know a little bit more, right? So the allowance for doubtful account gets better the more experience we have with a particular customer. So when we think about these accounting estimates, these are going to have, as we get better information or new information, get updated. And so in this scenario, that when we have a change in accounting estimate, again, this is a change in measurement methodology, has to be obviously justified on the basis that the change is preferable. So thinking about understandability, reliability, relevance, timeliness. So again, when we look at this, 62 obviously referred to both outputs and inputs, but again, they're trying to really bring this in here. And so if you read the basis for conclusions, there's a lot of discussion about why they made these changes, but we're really looking at that change in estimate. And again, this is going to be reported prospectively, again, assuming that there's no other guidance out there in the absence of any specific requirements on how to address an accounting change. General rule is going to be prospective. Now, here is where we, excuse me, here's where we really get into some of the changes that reflect this governmental environment, right? So changes to or within the financial reporting entity could be from the addition or removal of a fund. So example, a blended component unit, a change in the fund presentation as major or non-major. There is an exception for GASB 90 regarding the component unit. So again, there's a slight exception, but the addition of a component unit to a financial reporting entity or removal, or a change in presentation, right, from blended to discrete, or discrete to blended of a component unit, right? These are changes to or within. Now, from GASB 90, if it's an acquisition, merger, or transfer that results in the addition or removal of a discretely presented component unit, then again, that would not be considered to be changes to or within. So there's an exception for GASB 90 majority equity interests. So when we have a change to or within the financial reporting entity, that is going to adjust the beginning net position, the fund balance, or the fund net position, depending on if it's a governmental fund, proprietary fund, or fiduciary fund, or if it's the government-wide financial statements for the effects that have occurred as of the beginning of the reporting period. The other type of change here is a correction of an error, right? So this is going to be an error that results from either mathematical errors, mistakes in how we applied an accounting principle, or oversight or misuse of facts that existed at the time the financial statements were issued. And again, when we think about that, these are facts that could reasonably be expected to have been obtained and taken into account. So they provide a little bit of guidance about here. So again, a change from something that is not GAAP to GAAP is a correction of an error. And when we look at these, we are going to restate the prior periods, right? So because there was an error in the prior periods, we're going to go back and the cumulative effect of the error is going to be reported in that beginning balance. So that's going to be pretty consistent. Now, this is actually a pretty interesting one that they brought attention to, which is whether first-time adoption of GAAP, maybe you're using cash basis or modified cash basis. See a lot of small governments in certain states that's more prevalent. If they switch to GAAP, right now, what is that? And so the first-time adoption of GAAP is an adoption of a new financial reporting framework. And so it's not an accounting change. It's not an error correction. So a little bit of a focus that I really don't think we've addressed prior to this. They also address reclassification. So again, if you have reclassification, so if you do a change in accounting principle and things move around, or you have an error correction, what does that presentation look like? So for a change in accounting principle that does not have an effect on net position or anything like that, but does result in reclassification, then again, we are going to reclassify all prior periods presented. If we do not have an effect on net position for a correction of error, but again, that results in that we should reclassify all periods presented. So when we have to move between, or we went from operating to non-operating, or we're moving classification current, non-current, we want to make sure that that's reflected in all periods presented when we are having these reclassification. So again, not necessarily completely different than today, but through a different focus, right? So it doesn't change any of the transition for existing GASB pronouncements. Again, those are always going to be priority. And again, anything that's implemented as of the effective date, again, this is going to be, the GASB standards, they will decide the transition for those. So this is proposed to be effective for periods beginning after June 15, 2023, which would be calendar and June 2024. However, you could early adopt. All right, so that's a wrap for this week's blog. Hopefully it's a nice overview. If you are moved, you see something that they might have missed, or you have a suggestion or correction, definitely let GASB know. Again, that comment letter is due in August. Otherwise, thank you guys so much. Hope that you have a great week, and I'll see you next week. Have a great day, guys. Bye-bye.